Hello, everybody. Welcome to our latest video, our Southern California housing market update for March 23rd, 2021. My name is Stephen Mead. I'm the principal here at Domicile real estate for people who love houses. And this is kind of an interesting video, right? I'm actually not in a normal market area. I'm actually out of town at the moment, but I'm still in Southern California. And one of the things that I'm noticing and I'm hearing when I talk to people back in Long Beach, Orange County, Los Angeles, is that the weather's a bit weird at the moment, right? Like it feels very unstable. There's a term meteorologists use, it's called unstable air. And the reason why I'm going down this analogy is because that's really where our market is right now. Looking at the indicators this week, it is a lot of mixed messages. And whenever we see tons of mixed messages, days on market is dropping, total inventory is going up, prices are flat or dropping and rising in some categories. Whenever we see tons of conflicting data like this, what it means is that we're actually seeing a market that's sort of in flux and it's unstable and a bit of unsure of what direction it is moving. We've had some rates rise recently. We've had some inventory entering in the marketplace. These kind of things do tend to upset what was a very stable balance and indicate that things might be adjusting a little bit. So we're going to go through our stats this week, and then I'm going to tell you what I think is happening and maybe what to expect in the next few weeks in the market. So without any other delay, let's go forward to the stats, and we'll see. You'll see what I'm talking about. So the first thing that we're looking at here is our total active listings, and again, we divide this into two price categories: under $1 million and 1 to 2 million, sort of identifying the entry level and the luxury markets, or therein approximately, right? And in both of these markets, we see that inventory has actually increased by actually a decent amount, right? I don't think we've really, this continues a trend we saw last week. We see things are definitely getting better in terms of the number of total active listings, right? This is indicating that a market is changing. However, now, if we look at our last 14 days of new listings, we actually see that, that hit a rise about a week ago, and now it has actually declined slightly. So that's almost conflicting information, right? And a lot of times when we talk about these new listings, what we're really talking about is this is the supply side of our supply demand sort of reconciliation in our market. When we're trying to determine how hot is the market, right, it really at its most basic elements comes down to supply and demand. This is our supply side. And if you look here, things have actually eased off a little bit on supply. We had some great increases the last few weeks. And then the last week or so, they've kind of pulled back ever so slightly in terms of those new listings coming into the market. Now, if we look at our demand side, this is our new escrows in the last 14 days. We see a very robust demand in our under $1 million price category and flat demand in our $1 to $2 million price category. Now it is springtime, so we do normally expect both supply and demand to be increasing during these months of March, but we are almost hitting April. This is normally a time period really when our market starts to hit its stride, and it's not quite happening this year like we would normally expect. We are still very much a supply constricted market. Normally these numbers should have kept going up like this, and they aren't. Interestingly enough, we're also seeing our demand would normally start to go like this, and it's also not. So we have both our supply and our demand are having very lazy responses this spring. I think a lot of that might be buyer fatigue. It might be interest rates rising. I actually, my money is on that a lot of this is really buyer fatigue. Buyers are tired of being in a market where they write 6 offers and they're lucky to get a response on even one of them. So if we look at our absorption rate, though, this is interesting, right? If we reconcile our supply and demand, we see these absorption rates, which had fallen really the last couple of weeks, they both hit upturns. These are both still very firmly in that seller's market sort of zone, right? Like even our 1 to 2 million is still hitting that 80%. It's still very much a seller's market in both of these categories. And in fact, the market is actually, if you go by this, it's actually gotten a little bit tighter, even though number of actives has increased. Now, if we go to close prices, this is really where we see kind of this almost bizarre sense of our market. Now, remember, these close prices are based on data from a month ago, 4 to 6 weeks ago. But if we look, our 75th percentile price, that went up, right? That's our luxury end of the market, it went up. Our median level dropped, and our 25th percentile, which is our entry level, went up. So the market is sending very mixed signals depending on the price range that we are talking about. And like I said, this really is a sign that our market is sort of in this sort of unstable air moment, right? It's sunny one second, it's raining the next. We don't really know what's going on. There's not a clear direction. Now, this is a statistic that really we used to kind of get an idea on not just absorption in general, but what is happening for properties that have just been put on the market. So this isn't that stale inventory. We're ignoring the stale inventory. We're only looking at the houses that came on the market in the last 14 days. And both of these categories, our 1 to 2 million and our 1 million, took pretty significant jumps week over week. And what's interesting about that is, that really indicates a market that is getting easier for buyers. Right now, if you look back on here and you look at the grand scheme of where these numbers have been, these are still low numbers. Rising is not the same as high. And just because it changed directions, that indicates that things might be getting a little bit easier in both these price categories, even though our absorption rates also went up. Like I said, we have a lot of mixed messages. This is a very uncertain market, where I don't think there's a clear direction right now of what's going on. So if we look at our list to close ratio, we really need to readjust our graph. Never did I think we'd actually be seeing home prices routinely, on average, going for over 102% of list price, but that is in fact exactly what's happening. By the way, for those of you who think that this is novel or that this can't last, this has actually been the way it's been in the Bay Area market for quite a while. If you look at this, the numbers actually we see it's come down a little bit for a 1 to 2 million, but we're still over that 102% for that under $1 million category. What does that mean if you're a buyer in the marketplace? It means in general, right? Not every single situation, but in general, you will be offering more than the list price if you want to get the property. And in some cases, you might be offering a lot more than list price, right? Like you might actually have to be offer, 5, 6, 7% higher than list price, or even higher than that to get the property. It really depends on how the listing agent has decided to price the property and what strategy they're pursuing. Now, this is another one too, where we have to adjust the range in our graph. So despite the fact that inventory went up, and that if we go back here to our percent active after 14 days, that's going up. Look at where our days on market for our new contracts went. It dropped both for our $1 to $2 million homes, indicated here below 30 days. We've kind of flirted with below 30 days in the past 2 times here. But look where it's gone for our under 1 million. Our graph stops at 20 days, and we have dropped below that 20-day mark, probably around sort of that 18, 19 number. So that would lead you to believe that the market is actually tightening. Again, mixed signals like this indicate a very confused market. And again, if we look at our affordability number, right, for the median priced home, that actually dropped down a little bit. And, remember, this is based on our closed prices. So this is based on 4 to 6 weeks ago and today's interest rates. So it's important to remember that this number is going to have a lot of fluctuation. Now, of course, versus where we were last year, yes, we are a bit higher, but I think it's great to see that we're under that 110% level. So, I want to talk about a little bit about what this means if you're a buyer or a seller in the marketplace. I think if you're a seller in the marketplace, to me, what this says is, this is a very unstable market, and it could be a different market 4 weeks from now, right? In 3 to 4 weeks, this could look very different, and it may not be favorable to you. If you are a buyer, things may get easier in the next 4 weeks, or they might not. I think there's a lot of uncertainty. Before I could have told you, in the next 4 weeks, I don't see drastic changes. In the next 4 weeks, I think drastic changes are possible in this market until we see how kind of some of these numbers settle out. We don't have a clear indication of what direction things are going. This is like one of those days where the wind gusts in all kinds of different directions and the flag is all over the place. That's exactly what's happening in the market. And that also means, if you're a buyer, there might be some opportunities for you, right? You catch a listing on the right day, the sellers don't get tons of offers like they think, and they may settle for a lower offer. Whereas if they had only waited a week, they might have gotten something a bit higher. So there are definitely opportunities in a market like this when it's in flux. So, as a seller, remember that. And or as a buyer, remember that. And as a seller, try to keep your cool in a market like this. That's really the best advice I can give anybody. Anyhow, as always, we love your questions, comments. Don't forget to like, subscribe, hit that notification bell. We're definitely here for you for all of your real estate needs here in Southern California. If you've got specific questions, we'd love to answer those too. We will see you this Friday for our first time buyer entry level market update, where we focus on that end of the market and dive into some different statistics. Anyhow, thanks so much for watching. We will see you on Friday.